Welcome to this presentation by Facilitators Research. This research is distributed exclusively for informational and educational purposes and does not constitute financial, legal, tax, or investment advice. For such services, you may reach out to speak to one of our officers.
Multi-sector holdings are diversified holding companies with material financial services exposure alongside other businesses such as telecoms, mining, real estate, or consumer goods. These companies are a distinctive feature of African financial markets, often emerging from family-owned conglomerates that have grown into multi-billion-dollar institutions. This presentation examines the multi-sector holdings landscape, focusing on the largest institutions and the strategic dynamics that distinguish them from pure-play financial services firms. Understanding this subsegment is essential for any investor seeking exposure to African financial services, as multi-sector holdings often provide the only listed route to some of the continent's most valuable private financial assets. The leading African multi-sector holdings span Morocco and South Africa. Al Mada, the Moroccan Royal Holding Company, has a market value exceeding $8 billion dollars, with stakes in Attijara Wafa Bank and Maroc Telecom Société Nationale d'Investissement, also Moroccan, holds a $5 billion portfolio across financial services and industrial assets. Etisalat Al Maghrib, listed on the Casablanca Stock Exchange, has a $12 billion market capitalization anchored by Maroc Telecom and Wafa Assurance. In South Africa, RMB Holdings holds a $1.5 billion stake in FirstRand, while RMI Holdings holds $1 billion in Discovery and OUTsurance. These holding companies provide indirect, but significant exposure to some of Africa's largest financial institutions. The Moroccan Royal Holdings, Al Mada and Société Nationale d'Investissement, anchor the Moroccan and broader Francophone African financial system. Al Mada, formerly known as SNI, was restructured in 2018 and now holds significant stakes in Attijara Wafa Bank, Maroc Telecom, Managem Group, mining, Sonacid Steel, and Lessie Urkerstal, consumer goods. The holding strategy combines portfolio management with active operational involvement in its investee companies. Al Mada's stake in Attijara Wafa gives it effective control of the largest banking group in Morocco and one of the largest in Francophone Africa, making it one of the most influential financial sector investors on the continent. Multi-sector holdings exist in Africa for 5 structural reasons. Family legacy. Many African holdings began as family businesses that diversified across sectors over generations, with the holding structure preserving family control. Capital allocation flexibility. Holdings can reallocate capital across sectors based on opportunity, providing strategic flexibility not available to single-sector companies. Tax efficiency. Holding structures can be tax efficient, particularly when dividends flow between group companies in tax-favored jurisdictions. Political risk mitigation. Diversification across sectors and geographies within a holding structure can mitigate political risk in any single market. And access to capital. Holdings can raise capital at the parent level and allocate across subsidiaries, providing funding flexibility that standalone companies lack. Multi-sector holdings typically trade at significant discounts to their net asset value, often between 20 and 40%. The discount reflects investor concerns about capital allocation discipline, governance, complexity, and the limited ability to influence subsidiary strategies. RMB Holdings, for example, has historically traded at a discount to its FirstRand stake equivalent to 20 to 30% of the underlying value. The discount persists because of governance complexity, where minority investors have limited influence over holding company decisions, tax leakage, where dividends and capital gains are taxed at multiple layers, and opacity, where holding company reporting is often less granular than subsidiary reporting. Catalysts for discount narrowing include activist pressure, partial spin-offs, and simplification of group structures. The South African multi-sector holdings segment is anchored by RMB Holdings and RMI Holdings, both originally founded as financial services vehicles by the Laurie and Paul Harris families. RMB Holdings' primary asset is its approximately 15% stake in FirstRand, South Africa's second-largest banking group by market capitalization. RMI Holdings' primary assets are stakes in Discovery, the insurer and bank, and OUTsurance, the direct insurance brand. The holdings provide investors with leveraged exposure to some of South Africa's most successful financial franchises, but at the cost of the holding company discount and the inability to influence subsidiary strategy directly. Egyptian conglomerates represent another significant group of multi-sector holdings. Orascom Construction Industries, Orascom Telecom and Media Technology, and Talat Mustafa Group are among the largest Egyptian-listed companies, with operations spanning construction, telecoms, real estate, and financial services. The Egyptian holdings have been particularly active in private equity, with firms like Citadel Capital, now Kala Holdings, building significant portfolios across energy, transportation, and agribusiness. Egyptian holdings typically trade at discounts similar to their Moroccan and South African peers, reflecting similar governance and complexity concerns. The Egyptian exchange provides the primary listing venue for these holdings. Multi-sector holdings typically trade at discounts to net asset value in the 25 to 40% range, with the discount varying based on governance quality, complexity, and market sentiment. Average return on equity at the holding company level is typically 9 to 12%, below the underlying subsidiary returns due to holding company costs and the leverage effect of the discount. Financial services assets typically account for 60 to 70% of total portfolio value, with telecoms, real estate, and consumer goods making up the balance. The 5-year total return on underlying assets has averaged approximately 15%, though holding company shareholders have captured less due to the persistent discount. 5 strategic imperatives apply to multi-sector holdings. First, simplify group structures. Spin-offs and unbundlings of non-core assets can simplify structures and narrow the holding company discount. Second, improve reporting transparency. Granular subsidiary reporting and clear capital allocation frameworks can reduce investor concerns about governance and complexity. Third, distribute underlying shares. Some holdings have distributed underlying shares directly to shareholders, eliminating the holding company layer entirely. Fourth, practice active capital allocation. Holdings that demonstrate disciplined capital allocation, including share buybacks when discounts are wide, can narrow the valuation gap. Fifth, exercise ESG leadership. Holdings that exercise environmental, social, and governance leadership across their portfolio can attract sustainability-focused investors. In summary, multi-sector holdings will continue to play an important role in African financial markets, particularly in Morocco, South Africa, and Egypt. Pressure to narrow holding company discounts will intensify, with more spin-offs and unbundlings expected over the next 5 years. Holdings that demonstrate disciplined capital allocation and transparent reporting will be rewarded with discount narrowing, and environmental, social, and governance leadership will become a defining differentiator, attracting global institutional capital to progressive holdings. The multi-sector holdings subsegment offers investors leveraged exposure to some of Africa's most valuable financial franchises, but requires careful attention to governance and capital allocation. Thank you for watching this examination of multi-sector holdings.